back to ET Now. Very good morning. Well, it is the festive week and US markets seem to have got their festive cheer back. If you take a look at how the indices performed yesterday, well, a pretty good day is what we saw on the US indices. Let's start with the Dow Jones Industrial Average. It saw an uptick of over 1%. It saw an uptick of 580 points to that 46,067 level. On the S&P 500 also there was a 1.5% gain. In fact, there was a big rebound on the entire Wall Street. S&P 500 posted its best day since May. Both jumped more than 1%, marking the former's biggest one-day gain since May 27. Now, the broad market, that also clawed back most of the Friday's steep decline that we saw. The Dow also had its best day since September 11 and broke the 5-day losing streak. Now, these moves are coming after a Truth Social post from US President Donald Trump that eased investor worries about growing trade tensions between China and the US. And let me tell you exactly what Trump said. He says that don't worry about China, it'll all be fine. And markets seem to have gotten a breather after that and have sort of seen a rebound as far as the US markets are concerned. But Srishti, how are things on the crude front? While we keep major earnings that are going to be reported in the US later today.
Well, yes, Kanishka, lots to watch out for, and it was not just the global markets, especially the US markets, that saw a good rebound, but the safe haven buying was also seen to be happening. It was gold that was a record high level, silver moved 6%, but crude as well on the back of a positive development and commentary coming in from Donald Trump had seen a rebound and rebounded from its 5-month low as well. And overnight, we have seen over 1% uptick on the crude oil prices. And the last time I checked, it was trading in the green again. Brent is trading near to that $63 per barrel mark, while WTI as well. It's seeing levels close to $60 per barrel mark. So yes, across asset classes, we are seeing that shade of green across asset classes, and crude was indeed one amongst them.
Absolutely, Srishti. Lots of positive moves as far as both crude are concerned and oil, crude as well as gold, and US markets also seem to have seen a rebound. But let's get tracking all the top global stories that we're tracking this morning. First up, of course, lots of announcements coming from Trump. Now he has declared the war in the Middle East over, marking the release of remaining hostages held by Hamas after 2 years in captivity. Now, greeted with a standing ovation, Trump said that the long and painful nightmare had ended and Israelis and Palestinians alike. He announced that Hamas would disarm and called it a very exciting time for peace in that region. Extending an olive branch, Trump said that America's hand of friendship was open to even Iran, signaling hopes of a wider peace deal. Now, let's go across and listen into Trump's comments.
With the historic agreement we've just signed, those prayers of millions have finally been answered. As you know, the hostages have been returned, and further work goes on having to do with the, sadly to say, bodies. Together we've achieved what everybody said was impossible. At long last, we have peace in the Middle East, and it's a very simple expression, peace in the Middle East, and we've heard it for many years, but nobody thought it could ever get there, and now we're there. Civilians are returning to their homes. The hostages are reuniting. I mean, it's beautiful. I'm just watching it backstage. The level of love and sorrow, I've never seen anything like it. It's amazing when you see they haven't seen their mother, their father. They haven't seen them in such a long time, and they lived in a tunnel.
All right, but Ukrainian President Vladimir Zelensky will meet Donald Trump in Washington this Friday as Kyiv seeks urgent defense and energy aid. Now, the trip follows intensified Russian strikes on Ukraine's power grid that have forced rolling blackouts across multiple regions. Now, a high-level Ukrainian delegation is already in Washington to secure stronger air defense systems, energy resilience support, and tighter sanctions on Moscow.
Moving on, let's talk about Samsung Electronics, which has reported a stunning rebound, posting an operating profit that is the highest in over 3 years. This surge is fueled by a global semiconductor recovery and booming AI chip demand. Exceeded market expectations as well. Revenue was backed by strong smartphone sales in high bandwidth memory chip orders from AMD and potential deals with Nvidia as well.
China has sharply rejected new U.S. sanctions, warning it will take all necessary steps to defend its right as trade tensions rise under Trump. Foreign Ministry spokesperson urged Washington to reverse its wrong approach and resolve differences through dialogue, not threats. Now, seeking to ease concerns, Trump called President Xi Jinping highly respected, saying both nations want stability, not economic harm. Now, Trump remains on track to meet Xi Jinping in South Korea in late October.
Moving on, Oak Tree Capital's Howard Marks says that artificial intelligence boom hasn't reached the bubble territory yet. At least not yet is what the word is coming from him. In an interview, Marks acknowledged AI stock valuations are high but not crazy, emphasizing that expensive doesn't mean a crash is coming. He said that the hallmark of a true bubble is psychological excess, a mania where investors believe no price is too high. While enthusiasm around AI is still strong, Marks says that he doesn't see the kind of irrational exuberance now, comparing today's moment of the early internet era.
And severe flooding in Mexico has left at least 64 people dead and 55 missing after torrential rain struck the Gulf Coast and central states. Now, officials say the flooding followed an unexpected tropical depression which hit already saturated rivers and weakened the mountains near the end of the rainy season. Now, emergency crews continue rescue efforts while the government plans relief funding and rebuilding the operations in the hardest hit regions.
Moving on, SpaceX has successfully launched its Starship mega rocket from Starbase, Texas, marking the 11th test flight of the world's most powerful rocket. The hour-long mission comes after a turbulent year of testing for the version 2 prototype, including multiple failures and an explosive ground test as well. August flight went smoothly and today's launch, expected to be the last for the Starship generation, sets the stage for the upcoming version 3. SpaceX is pushing to ready Starship for NASA's planned 2027 moon landing, which is part of a renewed global space race.
And Minister of Foreign Affairs of Canada, Anita Anand, called on Prime Minister Narendra Modi today in New Delhi. PM Modi welcomed Anand and convinced that her visit would contribute to ongoing efforts to impart new momentum to India-Canada bilateral partnership. And India and Canada also issued a joint statement saying both the countries are renewing momentum towards a stronger partnership. Let's go across to Sumita for more details.
That's right. Canada's Foreign Minister Anita Anand met with India's External Affairs Minister Dr. S. Shankar and Prime Minister Narendra Modi. And of course, as an outcome of the talks, according to the joint statement that's been released by the Ministry of External Affairs, both India and Canada have decided to resume ministerial-level discussions on bilateral trade and investment. And both the sides hold the opinion that strong bilateral relationship is essential, especially amidst global uncertainty. In fact, it will help mitigate the vulnerabilities that are arising from shifting global alliances. And this partnership will ensure more reliable supply chains. And in fact, Ms. Anand is now expected to meet with the business community in Mumbai. But let's take a look at what both the sides have agreed to cooperate on. Well, a whole host of sectors: energy, green hydrogen, biofuels, electric mobility, climate action again is an important area of cooperation between the two sides. There's going to be two-way trade for LPG and LNG, investments in oil, gas exploration and production. And then, of course, there's going to be cooperation in critical minerals given the disruption that the world has faced on account of Beijing's export curbs on critical minerals. Then there's going to be civil nuclear cooperation in AI and digital infrastructure, and of course agriculture. Now, the External Affairs Minister stated that India and Canada are strong proponents of effective multilateralism climate action. So given the kind of disruption that we're seeing globally on account of Trump's tariffs, that's an important statement because multilateralism here has been agreed upon by both the sides. In fact, Minister Shankar also said that when we look at Canada, we see it as a complementary economy. We see another society. We see diversity and pluralism, and we believe that there is a close basis for a close, sustainable, long-term cooperative framework. Remember, this renewed vigor that we're seeing in ties between the two countries is after Prime Minister Modi met with his Canadian counterpart Mark Carney on the sidelines of the G7 summit, wherein both the sides agreed to add momentum to ties. Remember, this is happening after Justin Trudeau, former PM Justin Trudeau's allegations of an Indian link to Hardeep Singh Nijjar's killing, those soured ties. But in the recent past, both the sides have actually worked on improving ties, and now this is a significant day which has come as India and Canada have once again resumed talks, and there is going to be cooperation in several sectors.
All right, thank you, Sumita, for taking us through all those details. But moving on, the 2025 Nobel Prize in Economics has been awarded to Joel Mokyr, Philippe Angin, and Peter Hoyt for their pioneering work on innovation-driven economic growth. Now, Mokyr is honored for identifying the historical foundations of sustained technological progress, and Angin and Hoyt share the prize for their influential creative destruction model, which explains how new innovations replace old ones to fuel long-term growth. Their combined research has reshaped understanding of how economies evolve through innovation and competition.
All right, but to this viewers, it's time now to slip into a very short break in this edition of Market Capital Training, where we'll be right back with more on the other side.
With Wall Street, that soared after the U.S. President Donald Trump softened his stance on China. Now, China, remember, has slapped fees on U.S. ships for docking at its ports in retaliation for similar charges imposed by Washington on Chinese ships. Now, both of these fees come into effect on Tuesday, and let's see how the Chinese market is reacting to it. Now, the Shanghai Index, it's up nearly 0.6% on that positive news flow. Easing of talks is what we are expecting. Hong Kong's Hang Seng Index, that is also trading nearly 0.3% higher at the 25,980 level. On the other hand, we have Japan's Nikkei. Let's talk about Australia's ASX 200 first. That's the one that's trading in the red right now. That's the only index that's in the red right now at that 8,870 odd level. Other than that, Japan's Nikkei index, that has also now slipped to the red. It's down about 0.6%, 300 odd points at that 47,759 level. If we talk about South Korea's Kospi index, that is also trading in the green. In fact, it's up about 0.6% at that 3,600 odd level. So that's about most of the Asian indices. Most of them are trading in the green. Some of them have, been swinging between red and green. But yes, largely a mixed day is what we are witnessing for the Asia Pacific front. If we talk about the Nifty, we did see the Nifty end above that 25,200 mark, yet it ended about 0.2% lower. So largely range-bound day is what we saw, given the global overhang that we had yesterday. But now with positive cues in, on the front, let's see how D Street opens today. And in fact, we are, expecting a very muted but positive start for the Nifty as well. So let's see how that pans out, Srishti.
Well, yes, the global handover is looking good as of now, but just yesterday, when Nifty did start the week, that was seen to be on a tepid note amid the weak global cues as well, where Nifty ended with mild cuts around that 25,250 mark, while the broader market saw a mixed trade. Let me take it across to Snehi to get us a market roundup from yesterday's session. Snehi.
Well, yes, a subdued day of trade coming in for the market, but the recovery that we saw in the last 30 minutes or 1 hour was quite stellar. We managed to close about 25,200. So in that way, the recovery was something to watch out for. Sensex 2 recovered and closed in the red, only 0.2% lower. Same with the Nifty, and Sensex 2 managed to close above that 82,300 mark. In terms of top Nifty gainers, Adani Ports, Bajaj Auto, Bajaj Finserv, Shriram Finance, Hero Motor, they were the top gainers. On the flip side, big pressure continued on Tata Motors ahead of its demerger date, Wipro, Infosys, HUL, Power Grid as well as BEL. The broader markets traded mixed. Small cap closed under some pressure, but mid cap managed to close in the green. It's a good move coming in from the mid cap end of the market as well. But what really stood out is Nifty Bank managed to edge all the way back up into the green from the day's low, and very positive close coming in for Nifty Bank, albeit it was only very marginally in the green, but very stellar recovery on that front. In terms of sectoral moves, it was PSU Bank that led from the front, with names like Indian Bank, Union Bank, Bank of Baroda, SBI being the top gainers from that pack, followed by financial services, media, bank and realty on the flat line. On the flip side, big cuts on Nifty FMCG, so that was the top sectoral loser. United Spirits, HUL, UBL, Emami, Nestle. These were some of the losers. This was followed by Nifty IT, so Wipro, Infosys, Emphasis, TCS. All of them saw cuts anywhere between 1 and 1.5%. Other than that, if you take a look at some more sectoral losers following FMCG and IT, you had metal, energy, auto and pharma. Pharma too on the flip line. So, well, yes, that was the day of trade that we have seen in the market, and a stellar recovery from the day's low. Now that we also have the CPI numbers, let's see how the market reacts to that.
All right, thank you, Snehi, for taking us through that entire roundup. But Ashesha, let's come to you now. You've been standing by with a list of stocks that are going to be in focus today. Which are the stocks that you're tracking? Lots of earnings that have come in.
Yes, lots of earnings, and let's start with HCL Tech then. It reported its numbers and better than expected set of numbers. 2.4% sequential revenue. Constant currency growth is what the company has reported. TCV deal wins meanwhile stood at about $2,569 million US, which was an uptick of a solid 41% on a sequential basis, and it also reported $100 million of AI revenue in the quarter gone by. So better than expected set of numbers. Management commentary was also solid. Rathi, meanwhile, reported a strong growth both on a sequential and on a year-on-year basis. So AUM grew by about 22% YOY and about 4% sequentially, and revenue grew by about 9% QOQ and 23% YOY. So across all parameters, it has reported a growth both on a year-on-year and on a QOQ basis. Landmark Cars, meanwhile, has reported business updates for the quarter gone by. Revenue stood at about 1,655 odd crores, an uptick of 31% YOY. In fact, the company also says that GST cut, festive demand and new stores that the company added over the last few quarters aided sales in the second quarter. KEC International, meanwhile, on the back of some new order wins that they've won across India and Middle East to the tune of 1,174 odd crores. So big order win that has come through for KEC International. Shifting focus to Tata Motors then, record date for the demerger is today. We will see that stock adjustment happening, so keep an eye out on this auto major as well.
All right, thank you so much, Ashesha, for getting us all those details. Definitely lots to talk about, but let's also tell you which are the other stocks that will be in focus today. All eyes will be on Lodha Developers because of positive news flow coming in as the company has announced acquisition in Chaitanya Bilwa in Bangalore, which includes a land parcel of more than 8 acres, and this acquisition is done at close to 500 crore rupees. So definitely a positive development coming in from Lodha Developers. ONGC, where the management commentary has come in, with especially with respect to the crude oil prices, where they're not expecting the crude oil price to fall below that $60 per barrel mark, and they expect it to be a bit of a range bound, and they're not seeking government relief in the low price scenario as well. K-Fintech, a neutral news coming in as the company has completed the acquisition worth $34.7 million for 51% stake in Asin Fund. Other than that, LT Foods will be in focus as well. A positive development coming in over here as the company has announced an acquisition of 100% stake in 3 global green companies. So definitely a positive news flow. And lastly, India Glycols will be in focus as the company will mount fundraising on October 16th. So all eyes will be on that.
That's right, Srishti. Lots of stocks to track today, but several cues as well to track. And Snehi is here to take us through that list.
Well, yes, lots of cues to watch out for. It's Tuesday, which means it's the day of the weekly Nifty expiry, so watch out for that. And after CPI, all eyes are going to be on the WPI metric as well. From US, you have jobless claims numbers to watch out for, along with unemployment data. In terms of global earnings, lots of important big names and big MNCs to watch out for, the likes of JP Morgan, Goldman Sachs, Citi, Wells Fargo, BlackRock and Johnson & Johnson. So one major pharma name, and all of these others are big banking and financial names to watch out for. But shifting focus back home and talking about the earnings action here, from the Nifty pack, watch out for Tech Mahindra, and from the broader end of the market, watch out for names like ICICI Lombard, ICICI Prudential, Persistent Systems, Ireda, Cyan DLM, Thyrocare, Bank of Maharashtra. Lots of stocks will be in focus on the back of their Q2 earnings. Now moving away from that, in terms of corporate action and board meetings, Tata Motors demerger will take place. Star Cement board will be meeting to mull fundraising. Thyrocare board will be meeting to mull a bonus issue along with its earnings. All eyes will be on Tech Mahindra for its earnings and also the dividend that they will announce. Utkarsh Small Finance Bank will be trading X rights in the ratio 8:13, and Tata Investment will be trading ex-stock split in the ratio 1:10. So whole lot of board meetings and corporate action to watch out for as well. In terms of the primary market, you have LG Electronics India, big IPO listing on the street, so watch out for how that lists on the bourses. And Canada HSBC Life IPO will be closing for subscription. It's going to be the last day to subscribe if you wish to do so. Lastly, in terms of other events, remember US's tariff, that 10% tariff on softwood lumber and 25% tariff on upholstered wooden furniture will come into effect. Fed Chair Jerome Powell is expected to speak at an event, so watch out for his commentary. The IMF will be releasing its latest World Economic Outlook and will be holding a press conference thereafter as well, so watch out for that. Bank of England Governor Andrew Bailey, Fed's Michelle Bowman and Governor Christopher Waller will all be speaking at an event. Lots of important central bank commentary to also track, so watch out for all of these deals very closely.
Right, thank you so much, Snehi. But with this time now, once again, to slip into a very short break, we'll be right back.
Majority equity stake in private sector RBL Bank. Now, sources have told ET now that discussions between Emirates, NBD and RBL Bank are at an advanced stage, and RBL and this talks have been going on between RBL and Emirates NBD in the recent months. The Reserve Bank of India has still not given a complete waiver on the voting rights cap, and a formal application on this deal will be moved before the RBI after the deal announcement happens. The transaction is expected to trigger an open offer under the Securities and Exchange Board of India's takeover regulations, since RBL is the listed bank, and significantly the move is the strategic entry of Emirates NBD into India's banking market. It has a wholly owned subsidiary in India, and it is moving, and this move will help it move into the retail banking market, since RBL has a retail portfolio and also it's got a credit card business. In May, the Emirates NBD had secured an in-principle approval from the Reserve Bank of India to set up a wholly owned subsidiary in India. And these talks between both the sides have been on for the past few months.
All right, thank you, Anurag, for all those details. But let's move on and take a look at the next story that we have in line now. Pankaj Kumar, Director of Production at ONGC, spoke to my colleague Prakash Priyadarshi, and he is not expecting crude to fall below that $60 per barrel level. Let's listen in to his rationale.
See, we have kept an internal target of reducing OPEX by around 15%. That's a target how to work with. As I mentioned during the course of interaction, first we saw where are the opportunities. What are the big value items, big cost item, slice them, see where you can hit so that you can realize early value. And that way we started working on. We have taken some steps in logistics already, marine logistics, air logistics, passenger logistics. We have taken some steps. We have already evaluating the requirement of the rigs in offshore and onshore as well. So if we can reduce something over there, then we are seeing cost of vessels coming down, and we are changing our tender pattern as well to make it more cost effective, both in terms of the rigs and the vessels. So because these are high cost items, they'll give me money, and accordingly we'll look for others. So first phase I have just told, but we are working on rest of the things also. Centralization of procurement was the start point 1.5 years back we took to ultimately reach here.
So would you also be revising your overall capex target for the current financial year?
Overall target for current financial year, as such, no, we are not reducing. And for next year also, as such, we are not reducing. Whatever plans we are having, whatever big schemes we are having, we plan to move with that. But keeping cost under control. As I said, I have changed the project execution methodology in Western Offshore. I have changed the tendering methodology in Western Offshore, and we are realizing the results. I am getting bids which are at a substantial reduction in terms of the money.
All right, but moving on, in Central Board of Trustees of EPFO gives its approval for a simplified and liberalized partial withdrawal system for subscribers. Now members can withdraw 100% of their eligible balance. My colleague Prakash is here with more details. Prakash.
Yeah, it's a very positive development for the EPFO subscribers. In fact, it's a good news, festive bonanza, as the Central Board of Trustees, which is an apex body of EPFO, has decided to simplify and liberalize a partial withdrawal system for EPFO subscribers. Under a new mechanism, EPFO members will be allowed to withdraw up to 100% of the eligible balance in the PF, including employee and employer share. Along with that, partial withdrawal limits have been increased to 10 times for education purpose from existing 3 times. Similarly, partial withdrawals are allowed up to 5 times for marriage functions from existing 3 times. In addition to that, requirement of minimum service has been uniformly reduced to only 12 months for all partial withdrawals. So very significant development coming in, a very positive development as well. Members will have to maintain, however, members will have to maintain 25% of the contributions in the PF account as a minimum balance at all times. This is a very significant development coming in, very positive development for the PFO subscribers, as the government has simplified and liberalized overall partial withdrawal system. Back to you.
All right, thanks Prakash for all those details. But before we let you go, the net direct tax collection, that has increased by 6.33% for the fiscal to over 11.8 lakh crore rupees. That's due to higher corporate tax mop-up and slower refunds as well. Now, the refund dropped 16% to that 20.03 lakh crore rupees level. That's between April 1st and October 12th. What are the other details that you're picking up?
Yes, that's an important development coming in. In fact, India's net direct tax collections for the current financial year has on October 12, 2025 have recorded a 6.33% growth, which is reflecting sustained momentum in revenue receipt. The data which has been released by the Income Tax Department, which is essentially a provisional numbers, says that the gross direct tax collections stood at 13.92 lakh crore compared to 13.6 lakh crore collected during the same period in last financial year. Along with that, if you look at the refunds numbers, there is almost 16% decline, which is 2.03 lakh crore till October 12, which shows that there is improved compliance, significant collection efficiency, and of course, stronger advance tax inflows, which is a very positive development at this point of time as far as tax collection numbers are concerned. Along with that, if you look at the corporate tax collection numbers, which is essential part of the direct tax collection figures, that says gross collection, corporate tax collection stand at 6.42 lakh crore at this point of time, up from 6.12 lakh crore during same period last year. Along with that, STT stands at rupees 30,800 crore at this point of time till October 12, and the government is hopeful to achieve the overall direct tax collection targets, which was set in the budget, on the back of improved compliance and, of course, improved economic activities.
All right, thank you so much, Prakash, for getting us all those details. We're moving on to another news, wherein the retail inflation in the month of September falls to 1.54%. The figure is at its lowest level since June 2017, but meanwhile, the food prices also remain in the negative territory for the 4th consecutive month. Now, in the month gone by, food inflation came in at minus 2.3%. Additionally, both rural and urban inflation declined on a month-on-month basis, and core inflation, however, is at its highest level since September 2023 at 4.5%. But we also caught up with economists to understand the impact of the recent inflation figures. Let's listen in to what they had to say.
It's the same kind of trend we have been seeing in the last few months. So if you're looking at what is really driving this inflation number in a downward direction, it is essentially the food items component, which has been aided by a high base effect. That's why we're seeing negative growth numbers or rather negative inflation number for quite a few components, especially things like vegetables and also pulses. So I think this is a kind of a cushion which we're going to have for the rest of the year too. So I think when the RBI is talking of a number of around 2.6% for the year, I think that looks very much reasonable. We believe it could be slightly higher, but definitely to be less than 3%. But a lot of this is being caused by the base effect. So we shouldn't we should keep that at the back of our mind. The other thing which we have seen is that the monsoons have been fairly aggressive in certain parts of the country, northern parts as well as certain southern parts, Karnataka, Telangana, Andhra Pradesh, and Maharashtra. So I think there could be certain spurts in terms of inflation. We'll get to know about that because prices of these agricultural commodities are likely to show a higher increase in the coming months.
When you bring in the rate cut scenario, it is likely to be more a forward-looking Reserve Bank of India. While the monetary policy did not give out the number, the monetary policy report, which comes out every half year, has actually provided a 5.1% inflation number for Q3 of the next financial year in terms of the risks to inflation going forward from the food side. And overall, the base effect of the current year is likely to push inflation higher in the next financial year. Which I think will probably deter the Reserve Bank of India to immediately look at the rate cut story from purely the current inflation prints. Any rate cut, therefore, in my opinion, the bar is still quite high and can possibly only be delivered if there is a significant downside that we experience in terms of the growth prospects for the economy over the second half of the year.
All right, so that's about the macro data that we are picking up. But also let's also tell you about some of the domestic news flow that we are gathering this morning. So Andhra Pradesh Chief Minister Chandrababu Naidu held a meeting with Prime Minister Narendra Modi at his residence. During the meeting, PM Naidu invited PM Modi to attend over a business summit event in Visakhapatnam next month. Now, PM Naidu also said that he also congratulated the Prime Minister on achieving remarkable milestone of 25 years in public service as head of the government. Moving on, amid the tussle over seat sharing, Rashtriya Janata Dal, that is RJD chief Lalu Prasad Yadav, has begun handing out tickets to several candidates for the upcoming Bihar elections. 5 Lalu loyalists have been given poll tickets as Tejaswi Yadav returns to Patna from Delhi.
All right, time now once again to slip into a very short break. Don't go anywhere. We'll be right back with more on the other side.
The company will get listed on the bourses today. As I mentioned, the company was looking to raise about 11,600 crores, but it received a subscription and bids worth nearly 4.4 lakh crore. That's the kind of massive subscription that we saw as far as LG IPO is concerned. Remember, it was oversubscribed by nearly 54 times. That's the kind of response this particular IPO got. As far as valuation is concerned, remember it trades cheaper, or rather it was priced cheaper as compared to its peers. It was priced at about 32 times FY26 price to earnings versus Havells at about 57 times, Voltas at 48 times, Blue Star at 59 times and Whirlpool at about 44 times. So clearly, as far as valuations are concerned, it was priced cheaper as compared to its peers, and that justifies the kind of response this particular IPO got. Now let's also look at the listing scenarios and the valuation it will trade after it gets listed. Now if it gets listed at a 30% premium as compared to its issue price, it will be valued at about 35 times FY26 price to earnings. If it gets listed at 40% premium, we will see a valuation of about 38 times, and about 41 times valuation if it gets listed at a premium of about 50%. And we are expecting a bumper listing for LG at about 35 to 40% premium. So yes, that's the expectation as far as LG listing is concerned. We are expecting a bumper listing for this 11,600 crore IPO.
So Shesha, for all those details, all eyes on the LG Electronics IPO. But another stock that is going to be in focus today is HCL Tech. Now, this large cap IT reported its Q2 numbers and profit and revenue beat estimates. The company's consolidated revenue rose about 5.2% to come in at that 31,942 crore level. Well, the profit, that saw an increase of over 10% to that 4,235 crore level. Let's listen in to what MD and CEO Vijay Kumar has to say about the company's outlook going forward.
Our bookings exclude rate card deals and renewals. We emphasize more on the new booking metric, which generally has a strong correlation with revenue growth, typically observed with a 1 to 2 quarter lag. Nearly all deals include AI, and our comprehensive suite of AI offerings was instrumental in securing multiple large strategic wins. While the broader manufacturing segment is doing fine, there is continued impact due to auto sector slowdown. Coming to the recent H-1B visa fee revision and its potential impact on us, over the years we've made conscious effort to reduce our reliance on visas by strategically strengthening our global delivery model.
And we also spoke with Swaminathan Iyer, consulting editor of ET Now, who throws some light on the ongoing tariff tussle between US and China. Meanwhile, he says that the global growth will slow down and impact India, and will see delays to India's Viksit Bharat plan for 2047. Let's go across and listen in.
Trump seems to be a man who is willing to come down. He starts with large numbers and comes down. So I think Trump is the man who is going to come down. But let's be very clear. Now that there is in effect a kind of Cold War, geopolitics is here to stay. This is not something temporary that started with Trump. Even in Biden's period, will Trump come down or China? I think Trump will come down, but China has now slapped him on the face more than once. But, I don't think he's going to take that much amiss, because as the market says, this is the taco president who likes to talk very, very big and then chicken out. Neither Trump nor China gives a damn about the damage to India. Overall, the security issue being such, I think we will have to increase the amount of spending on defense, and we will have to really, look very, very closely at this particular area and said, we have been assuming that we can make do with this extremely low 2.5% of GDP on defense. I think we will have to increase it. And on ourselves and not on the other allies whom we had depended on in the past. So, we are in trouble in this particular situation in the long run. So we have to understand the security angle that has now come into economics in a big way. Unfortunately, it will mean somewhat slower growth. But India can take that in its stride. I mean, if instead of growing at 7%, you're growing at 6%, you will manage. You will still be highly resilient. You will still be the fastest growing economy. But you are certainly not going to reach Viksit Bharat status in 2047. Things are going to slow down, and we cannot get away from the fact that we now have to develop our own rare earths, and we have to develop, wherever we see a major issue, we have to develop resilience out there. Well, India is going to have a trade deficit with America for a long time. So in those circumstances, he's going to try to hit you.
All right, so that's how the US and China trade tensions are likely to impact India, and how we must balance that going forward, given the geopolitical tensions that are underway. That's the word coming in. But with that, we're completely timed out in this edition of Market Cafe. Srishti and I will take your leave, but don't go anywhere as the market will take all the action forward.